Okay, everyone. Good afternoon for you that's been here. Thanks for so much for coming. Today we're going to have a session on FKP about a paper which called "A Tale of Two Liberalization Episodes with China: Impact on Poverty in a Developing Nation." So very lucky to have two distinguished colleagues of mine who wrote this paper, basically. First one is Deasy, my longtime friend. She got her PhD from the ANU, Canberra, and currently working at BAPPENAS, Directorate of Trade, Investment, and Economic Cooperation, or we call it PK. And her co-author, Natanael Massie, I often call him Warren. He did his Bachelor of Economics at Universitas Indonesia and a Master of Computer and Information Technology from University of Pennsylvania. The papers really talk about how our trade shape Indonesian poverty, which is, at the moment, Indonesia is quite growing discontents about the lower growth of middle class. So this might have something to do with it. So without further ado, I will share my.
Yeah, thank you so much, Krishna, Pak Imet. Thank you so much for a very nice introduction. Good afternoon, everyone. Thank you for being here. Today, Mas Waran and I would like to present our paper titled "A Tale of Two Liberalization Episode with China: Impact on Poverty in a Developing Nation." We will take turns in presenting this paper. We'll go first, yeah, Mas Waran. Okay. So I guess those of you attending this seminar is quite interested with recent issues on trade with China. You may be already very familiar with all these media headings. We Googled news with the keyword of ASEAN-China FTA, trade with China, import from China, and we find quite many news that show negative tone regarding increased trade with China. This is interesting because this also reflects public opinion about China effect. It seems that mostly show that increased trade, especially import from China, is negative. Chinese products are often blamed for the surge in import and trade imbalance in Indonesia. That's why we are also familiar with policy measure to limit import from China using tariff and non-tariff. Recently, the government also introduced regulation to tightening import, including shifting the inspection from post-border to border, and also there are also some trade remedies policies or measure that targeting Chinese product. Actually, this is not only happen in Indonesia. Many countries all over the world concerned about China. We can see from news about tension between the EU and China have also escalated. Not only developed countries such as US and EU, developing countries such as India, Brazil, also concerned with the increased trade with China. So the tension is almost similar with Indonesia that we discussed before. From all this narrative and what we see in the public discussion for us, Waran and I, there is a very interesting question. Is trading with China truly a threat? Is there no benefits of increased trade with China? Is this just public perception that China is a threat, or do we have strong evidence for this? So this is what we will discuss today to elaborate the impact of increased trade with China, especially on poverty. So we know that China phenomenon has been remarkable. In terms of trade, China has become the largest exporters that has a consistent higher export growth with about 13 times export increase since it joined WTO in 2001. Currently, China has the largest market share in the world, rising from only less than 2% in 1980s to about 4% in 2001, and reached the largest at 15% in 2021 to 2022. China expansion actually has created both supply and demand shock to the world, and also has contributed to the global economic growth. We know that China become the central hub in global supply chain, producing and exporting almost any kind of products that we consume. Due to massive economic scale, China goods actually have lower production costs of industry that need input for their production, and have provided cheaper consumer goods worldwide. Since China is also a very big country, China also absorbed many products, especially commodities, and create huge demand shocks. This expansion also create competitive pressure to almost all countries in the world, like we see from the news headings before. Increased competition, both in their domestic markets and also in export market. And this also create a trade imbalance. Well, we know that China has become interest of many. In here, we report some studies about China impact on domestic economies of some countries. There are a lot of study on US. The most famous one is from author in 2013, and author also write many other paper about China and US. And most of these studies find negative impact. Factory closure, job loss, decreasing earnings, and so on. There are some studies on developing countries, but not as many as we thought before, interestingly. We find studies on Mexico, Africa, and Brazil. We can say that it is mixed result for developing countries. Some negative impacts due to increased competition, but there is also evidence of industrial upgrading due to competition pressure, as well as poverty reduction and wage growth, especially for countries that benefiting from rising Chinese commodity demand. We find that the most extensive study from developing countries from Brazil, and it is quite interesting that we don't find many studies on distributional impact of China growth on ASEAN countries, including Indonesia. So I think this is our contribution to this field. This is actually motivated us to explore more about the China impact on Indonesia, and we want to elaborate more on the distributional impacts. Our trading with China is still negative, like media says. Then our research question is, how do trade liberalization episode with China affect poverty in Indonesia? In here we have P0 poverty rate, P1 poverty gap, and P2 poverty severity. P0 represent the poverty rate, means its proportion of people living below the poverty line, and the poverty gap measure the aggregate income gap of the poor relative to the total income required to reach the poverty line, and the poverty the P2 indicate the depth of the poverty. Indonesia actually offers an excellent context for studying the China impact because China the China importance in Indonesia import-export activity has expanded significantly. Currently, China is the #1 trade partner of Indonesia. China has become the world's largest factory. It has led and integrate the region to establish regional production network to serve the global market. But unlike other neighboring countries in Southeast Asia, Indonesia export to China focus more on extractive sectors and resource-based manufacturing. Meanwhile, our neighboring country more do it manufacturing, more on manufacturing. Also, Indonesia diverse geography and large size create variation in local labor market with different comparative advantage. So we have so many districts province that that have different condition, different situation, different comparative advantage. This actually make us able to do a more detailed analysis of trade effect with China. And also Indonesia socio-political ties with China have been dynamic for decades with a history of ambivalence toward the relationship. So in here we have graph that show increased trade between Indonesia and China in 2000. In here, but in here, China account for about 6% of import, and Indonesia receive and 4.5%. This is about 4.5% of export, and it increased significantly. In 2022, we have 28% of import from China and 22% of export to China. So this show that China increasing economic importance to Indonesia. Also, this figure show that Indonesia commodity export to China increased significantly, especially after China joined WTO. So after China joined WTO in 2001, there is like a demand shock, and it makes Indonesia export commodity export to China increase significantly. We can also see from the share commodity export to China compared to the world is also increasing. So the gray one. So China become the largest proportion of the Indonesia export commodities to the world. So now we show you here the import tariff that applied in Indonesia and China for each other products. So we can see the blue one is China tariff and the green one is Indonesia tariff. We can see that the tariff have significantly declined from 1980s to recent years, and we can see that there have been 2 episodes of trade liberalization. The first one is when China entered WTO in 2001, and both countries enjoy MFN tariff and have been quite low, on average about 6% for both export or import, or Indonesia tariff and China tariff. Provisionally, it about 13 to 14%. And on the second one, after the ASEAN-China FTA in 2010, it further decreased the tariff to an average 1%. So in here, we argue that there has been 2 episodes of trade liberalization between Indonesia and China. The first one is after China joined WTO, and the second one is after ASEAN-China FTA. And if we see into detail tariff for HS 2-digit products, we can find that many products categories have been fully liberalized at 0%. So we can compare before ASEAN-China FTA or MFN tariff and after ASEAN-China FTA, so provincial tariff. So the green one is MFN and the blue one is provincial tariff under the ASEAN-China FTA. So the cross different HS 2-digit code. So this is for import import tariff in China, and also this is import tariff in Indonesia. So we have almost similar figures. So basically, our identification strategy is we use these 2 episodes of trade liberalization in our analysis. Waran will explain it into detail. But to be brief, we use shift share analysis with instrument variable in our study. So basically, we want to compare region with different labor structure. Means that they have different initial comparative advantage before the liberalization, and trace the gain for this region whose basket of their industry or sector have been faced higher increased trade with China for both export and import. And compared to region, those industries have been relatively unaffected by trade liberalization with China. So this is the concept of share. Actually, we compare a region that have largest proportion of their labor actually do more trade with China, and with the region that have less trade with China. And we have 2 episodes of liberalization. So we need to choose with initial comparative advantage or labor structure that we will use in the model. So our main focus is actually for liberalization. We use the labor structure in this year 2008 before the signing of ASEAN-China FTA. So this is our base year. However, the labor structure in 2008 might already have been influenced by the first liberalization stage with China when it joined WTO in 2001. Then we also used baseline in 2000 to better capture the world effect of China's trade influence and see how the results differ. This is our strategy in our analysis. Warren will explain into details. And in here, we also follow author 2013, in which trade exposure is defined as change in trade flow between Indonesia and China. Before Warren explain more into detail on the model and result, I would like to share some of our findings just briefly. So the first one is finding on increased import competition by utilizing two pace of trade liberalization between Indonesia and China and variation in trade exposure across district. Our studies show a consistent, robust, and strong link between increased trade with China, especially increased import, on poverty reduction in Indonesia. So region with a significant number of workers in sector which with high Chinese import tend to have better poverty-related outcomes. The poverty rate, poverty gap, and poverty severity. So basically, we have positive impact of import competition from China. And when we go into detail, the impact is more significant for imported input. This is also support the findings by Kiskatos and Sparrow 2016 and Pane and 2023. And we also find, although the effect is smaller, increased import of consumer goods also reduce poverty, suggesting that cheaper goods from China enhance purchasing power for poorer households that spend a larger share of their income and basic necessities. And we also find the impact of increased import of capital goods, it's not significant. And when we compare baseline 2000 and 2008, the effect is especially pronounced when we use 2008 as the base year, suggesting that further liberalization with China under ASEAN-China FTA accelerated poverty reduction in region with higher import from China. The impact is not significant when we use base year 2000. And this is for the findings of increased market access to China. So when we do trade liberalization, both of us open our market, so increase import and also increase our export. So the impact is further liberalization under the ASEAN-China FTA in China export market have little effect on poverty in Indonesia. So increased market access to China is actually has limited effect for Indonesia in poverty indicators for all. It is very interesting actually for us because we didn't expect this before. Using 2008 as baseline, export of raw materials and intermediate goods to China help reduce the poverty rate, but not poverty gaps and severity. So when we compare between indicators, there are some heterogeneity findings there. It indicates that a sector benefiting from export growth don't employ many poor individuals, or if the wealth generated from the export is not well redistributed. However, analyzing the initial comparative advantage in the sector from 2000 reveal a significant reduction in poverty gaps and severity. This suggests that in early 2000s, China boom, so increased demand shock from China, which create demand shock for input supplying countries, including Indonesia. The impact poverty reduction in Indonesia more than the tariff cuts from the ASEAN-China FTA. So if we use the baseline 2000, the effect is more significant, but we argue that this is because of the demand shock of China, not from the tariff cuts. We also do some heterogeneous analysis, and the impact of increased import on poverty rate is more pronounced in urbanized, educated, and literate regions, highlighting the importance of education and literacy in leveraging the benefit of trade liberalization for income growth among the poor. In contrast, result for P1 and P2, poverty gap and poverty severity, show stronger effect in less literate and less educated areas, suggesting that increased import competition from China can improve economic condition in this region, reducing poverty severity, but not fully alleviating poverty. Urban areas perform better across all measures, P0, P1, P2, indicating that improved infrastructure and access to services, including financial facilities, enable this region to capitalize on liberalization. Increase export. The three point before is about import, and the last one about export. Increased exports show that sector benefiting from China, from trade with China, rely more on the less educated and unskilled labor. This may align with the HO model and Stolper-Samuelson theorem. This theory suggests that a region will specialize in exporting goods that intensively use their most abundant resource, in this case, less educated workers, and that trade liberalization will primarily benefit these workers, especially in less educated regions. Next, I would like to invite Waran to discuss more on detail on our data model and also result.
Thank you, Deasy. Allow me to continue. So I will, after the very comprehensive overview and like the overall findings of the study, allow me to delve into the more technical aspects of the study. I will describe the data and the methodologies, and also we'll follow with the results. Let's start from the data. So the data that we utilize comes from we use three main sources of data. For the trade data, we use WTS data, which is the World Bank's integrated trade data. That allows us to track, I think, very detailed trade flows between China and Indonesia at the product level. But related to the second set of data, which is the labor force data that we utilize to create the exposure variable that will also be described later. That data is expressed in the sectoral code for Indonesia, which was KBLI. Thus, the trade data that was initially in HS codes were translated into KBLI using, I think, the translation that was provided by BPS. So between HS 2012 and KBLI 2009, there was a concordance that we utilized. And also for the outcome variables and or the heterogeneous variables that we utilize in the downstream analysis, we utilized the National Socioeconomic Survey, or SUSENAS, to provide the district level data. If we take a look at the table in the bottom, that is I think the breakdown of the main variables that we use. So if we take a look at the P0, P1, and P2, we show the numbers between 2008 2009 and also 2010 to 2012, more because in the in the year of 2010, I think that's where ACFTA took into effect. So we tried to take a look at whether there were like existing significant differences between poverty rates, like the main outcome variables we, between those two periods. And I think the means are the numbers on the left-hand side of each cell, and the standard deviations are in the brackets. I don't think we can see much noticeable differences between the two periods. So I mean, it could serve as a ground to say that in general, the poverty rate, the poverty gap, and poverty severity, the outcome variables, they do not differ very much between the two periods, and so that hopefully the differences were indeed primarily driven by the trade exposure variables that we try to isolate. We also put the numbers on the export per worker variable. So essentially the trade variable that we utilize, also the literacy rate, the education rate, and also the urbanization rate. And similarly, we see little to no difference. And also, I think it's important to note, although we did not put it in the slides, I should have put it in slides, but these are the between 2008 and 2012 is the period where all of our estimations were estimated at. So because if in the case of ACFTA, the base year is indeed 2008, so that's where we utilize the model. We have annual data of all these variables, 2008, 2009, 2010, 11, and 12. But then also where we say we use base year of 2000, as mentioned by Bu Deasy in the earlier slides, that means we still use data within this range, but then to calculate the exposure variable, we use the labor force composition in 2000, back in 2000, but the data is still in 2008. We acknowledge that I think that's actually in the full paper we did a lot of calculation that also includes 2000, but even in the discussions that we have earlier in our disseminations, I think it was also becoming apparent that the data, especially the socioeconomic survey data back in 2000 and 2001, the quality of the data was rather difficult to say the least, like and to calculate reliable poverty related measures and other socioeconomic data, that becomes a very challenging aspect in the study. So that is the case of the data that we want to specify. The entirety of the estimation period is as shown in here. We utilize different labor force structure when we say base year 2000 and base year 2008. Next slide, please. And this is the main exposure design that is also called the shift share design. I think it was popularized by Bartik back in the 90s, also called as Bartik instrument. But we follow what has already been done, I think, by author 2013 on the very famous China effect paper on the States. Also, I think that was used by Kiskatos and Sparrow 2015 that take a look at Indonesian case, I think, but on a case of like an overall liberalization. So here we construct what is called as the trade per worker, or TPW for short, variable that we calculate for each district in each time period, so DT. Essentially, it comprises of the two distinct, but in one same calculation of shift share components. The share itself actually is it's sort of like the static variable that is made same as the initial period. So everything there is T0. Essentially, that's the labor share proportion of the sector in the region at the initial period. So we try to sort of like lock in the quote unquote importance of each sector in each district. depending on how the landscape is in the initial period. So if the base year is 2008, then that share locks into the 2008 period, regardless of the time that we use. So say in 2011, the share is still using share in 2008. Also, if we say the base year is 2000, it's applied analogously. And as for the shift variable, the shift variable is the trade related data. Here it is the trade either from China or to China. That's the numerator. So we take the annual difference between, say, the export from China to Indonesia for sector S in time t minus that such variable in t minus 1. And then we try to normalize that by the number of workers so that we can get sort of like a trade per worker variable that is more normalized and is not, is not taken into extremes by regions that have significantly larger trade, compared to those that has significantly smaller trade, because we try to normalize it with the number of labor. So we follow, I think, Author, Kiss, Katos, and Sparrow, and other that also utilizes a similar method, but we apply it to the Indonesian case. And this is the main variable we use. In the next slide, as we see, we calculated a very similar variable, which is the instrument variable. In the previous slide, we used the China to Indonesia trade. In the instrument variable, we use the opposite of that, still from China, but to world minus Indonesia. So hopefully we think that would prove to be a pretty valid instrumental variable to be able to isolate the variations that we aim to estimate. I think this is also utilized in the paper by Costa in Brazil in 2016, if I'm not mistaken. And also in Author, they also use an instrumental variable, but not from China to world, but in Author they use like big 7 non-China economies to the United States. So it's a quite commonly utilized method to try to make an instrumental variable in the first stage, aiming to isolate the variations on the estimation that we aim for. And we also will discuss whether our result will vary if we use another different instrument, I think, near the end of the presentation. If you go to the next slide, please. So this is the estimation strategy. The blue colored variables are the main regressor variables that we are interested in, the coefficients. So in the first stage, we regress Indonesia and China's trade per worker variable to the lag periods IV. So the IV, again, as mentioned in the previous slide, that is between China and world minus Indonesia, using the same controls, but in the lag period as in the same main model. And then we use the predicted result from that first stage estimation in the main model. And in the main model, we use that as the main regressor to see the associations with the poverty-related outcomes that were previously mentioned, P0, P1, and P2. We did this for the overall estimation. So we did this for all the regions in Indonesia. Also, we tried to look at several heterogeneous variation. Either, we take a look at if we subset the estimations only, say, for the more educated districts, for the maybe the more rural districts, and so on and so forth. Also for the, we also try to check and explore the potential explanations to the results by doing, again, a subset estimate. But what we subset is the trade variable. So instead of we regress it to all of the HS codes that were available or all the sectoral codes that were available, we try to isolate, say, only for the product codes that were considered as, let's say, raw materials or intermediate goods and capital goods and so on and so forth. those were implemented using UNCTAD's classifications to take a look at, whether regions that were, more driven by raw materials or more driven by intermediate goods and so on and so forth, they have significantly more pronounced impacts than others. So yeah, that was the estimation, the data and estimation. As for the result, we see this. Essentially, if we take a look at the numbers here, this is the export side. The darker one is actually the later one. The 2008 is the prior one. So if you take a look, almost all regions, I think, are showing that they have higher trade exposure per worker in terms of export following the time progression. I think only the very topmost region is like decreasing, but almost all the other sees and rather unanimous increase in terms of trade exposure per China. And if you take a look at the import side in the next slide, it's a similar figure. So again, in the descriptive statistics part, we try to show that actually the variations between the poverty rates and like the poverty outcomes are kind of similar before and after, but the trade exposure are unanimously increasing. I think sort of giving us that hopefully appropriate background to do the shift share analysis, isolating for this variation. In the next slide, we'll see the first sets of result. This one is on the poverty rate. So this is P0. And if we take a look at the slide, also on the column names, we see that it's either OLS or it's instrumented. And on the, I think on the third row at the bottom, it says base year for labor force share. So that's where we show that the base year is either 2000 or 2008. Across all models, this is for the poverty rate and import competition. I think the signs are negative, but it's especially significant and negative on the column 4, showing that on that estimation strategy, we see that under the instrumented model and utilizing the labor force structure in 2008, regions with with higher exposure to increase import per worker to China at the regional level across time. If you track the poverty rate difference across time in those regions, that's where the poverty rate impacts are the most pronounced. And yeah, if we take a look at the next slide, please. Oh, yeah, sorry. Yeah, in the P1, I think it's a similar findings. We see that in column 3, there's a positive significance. Actually, if it's positive, that essentially means that the poverty the poverty gap sort of increases, but at a 90% significance level. But again, in the P1 difference specification on column 4, we again note a notable and significant association there. And if you take a look at P2, I think a similar number is going to be shown in column 1 and in column 4. Interesting here in column 1, even if we use base year 2000, we see the significant impact here, but this is in the poverty severity case. So again, this is import competition. This is what we say as the import per worker. In the next set of slides, we'll see the case where that is export per worker. So here in the export per worker, the signs are again negative, but little to no significance that we can see in the first row. Similarly, if we take a look and in the next slide, in P1, like little significance for columns 1 and column 2, but yes, again, the result shows that there is that decrease, but it's rather mild. And in the next slide, if we take a look at the P2, this is where those effects are a bit stronger. And interestingly here, this is only applied for regions with stronger labor force concentration back in 2000, and not so much for the 2008. So these are how the results are shown if we do the estimation at a national level. So this is like all sub-regional governments, all products, I think all specifications. But in the next set of slides, I think we'll try to check out how it differs across product categories. So if you take a look at this slide, we show the estimation results. I think all of them are IV because the IV stats are all there. So the Kleinberger PAP, the Craig-Donald-Walt variables are all there. So it's all IV. But we try to isolate the estimations and construct the trade per worker variables only if the case is that the variable is if the trade variable is for products that are either raw materials, intermediate goods, consumer goods, and capital goods as defined by UNCTAD. So if you take a look at that, actually the result is showing some more interesting pattern that the significant associations are more pronounced for regions that are stronger or having higher concentration in labor force participation, but on the raw materials and intermediate goods. And this is for import competition. So if they can essentially import more, I think cheaper for raw materials and intermediate goods, the poverty difference are more pronounced. And I think that's an interesting finding because we thought, and I think a lot of other papers also explored the potential channels more into the fact that, oh, if China, if we get more, if we can import more from China in terms of consumer goods, then that means that our regions might be poorer because they face higher competition and so on and so forth. But at least in our findings, what we see is that if they can get access to raw materials and intermediate goods sort of cheaper from China, or in a much higher volume from China, what we hypothesize is that they could have better business related outcomes that will in turn be related to how the poverty rates and poverty outcomes change in the regions. So this is shown for P0. I think if we go to the next slide, similarly we'll show we'll see that in P1 and P2. So for raw materials and intermediate goods, those are the significant associations. As for the consumer goods, also we see some associations, but really nothing to show, and it gets weaker for the capital goods. And we've also ensured that these goods are mutually exclusive, so that no same good are included in the different subsets. So this should be a mutually exclusive and exhaustive calculation. That was for import competition. So that again for import. In the next one, we see the result for market access or for exports. So again, regions that can export more for raw materials and intermediate goods. Again, maybe the less sophisticated goods from Indonesia, they tend to have more pronounced poverty outcome differences. So again, if you take a look at the national level, we see and like if you jumble all of them together in the same basket of goods, we see no significant changes. But if we break them down into those that exploits, whether it's raw materials, intermediate goods, and so on and so forth, actually exporting regions, but more for the raw and intermediate phase of the manufacturing, they do enjoy a more pronounced poverty rate changes. And if you take a look at the next slide, actually similarly for the intermediate goods, but in the different base year. So that is for the intermediate goods. sorry, I mean for the poverty gap and severity, but less pronounced as the poverty rate as in the previous slide. So, yep, these are when we take a look at the potential channels. If you go to the next slide, we'll see the one that we mentioned as the heterogeneous impacts. Essentially, we try to, again, do the bunch of estimations. But if you take a look at the column headings, we regress that to the regions that are either more urbanized, so urban percentage higher than median, median defined as the median urbanization, proportion of households living in urban areas by SUSENAS in the base here. So in the more urban regions, I think we note quite a lot of significant differences for P0 difference in the left upper side of the tables. And for the in the regions that are more literate or less literate on the middle, I think the results are similar. That the more and less literate, they have significant differences in terms of P0. But for P1 and P2, only for more pronounced for those that are less than median, so the less literate regions. And for the right upper result, either we are more educated or less educated than median. All of them show significance, but more pronounced for the less educated and P1 and P2. And yeah, the ones above are for import competition. The ones below, the tables that are in the second half in the slide, they are for export per worker. I think similar findings also were shown, but more mild associations. But essentially, what we find is generally almost all of the main variables that we aim to exploit, they show the similar coefficient signs, only with different strengths as we iterate through the different subsets of the regressions. Finally, we go to the next slide. I think this should be the last slide. We try to also do some robustness checks using alternative instruments. Previously, we used the China trade with world minus Indonesia as the instruments. We try to apply like Indonesia to US trade with the same exact construction as the one that we did China. And I think, and we instrument that to China's, and we took a look at the results. I think the results also showing the similar signs and similar strengths in terms of the import per worker exposure. And yeah, I think to summarize, we again, what I try to just show us in the past 10 to 15 minutes is we ran quite a lot of bunch of estimations with different subset and filtering variables, but we see quite a similar pattern emerging, that regions that are more exposed to Chinese trades, they tend to have more pronounced poverty outcomes results, but there could be different driving factors maybe that we could hypothesize that could be coming from whether the region is more exporting raw materials and intermediate goods. They have more pronounced results, but also I think for the regions that are having less literacy and less education level than the median regions in Indonesia. And yeah, that would be all from us. If you go to the next slide, that's a thank you slide from us. Lastly, also we show the appendix, please, if possible. The appendix, this is what I think what Deasy previously mentioned, that we hypothesized that there could be a changing of labor force structure between 2000 and 2008. And this is how we try to test that, although still very indicative. This is the difference, the labor force difference in each district, in each sector, the difference between 2008 and 2000. and we try to regress that with the if the sector itself has increased import or increased export from China, what we find is for export no significant association, but actually for the import it kind of shows a negative relationship. So essentially it's sort of saying that in this very limited test we can see that sectors that have seen increased imports from China tends to have lower or changing into lower labor force concentration in 2008, starting from 2000. So like sort of like maybe it's sort of like a crowding out or something like that. Maybe further research will be needed for that. But this is why we try to hypothesize that there could also be an existing change in labor force structure, and thus we tested using 2000 and 2008, although the results did indicate that the significance is more on the 2008 as a base year. But yeah, if you go to the back one slide, that's the thank you slide. That's a thank you from us. Yeah, I give it back to Bu Deasy, and I think the moderator, Bapak Imet. Thank you.
Alrighty, thank you, Deasy and Warren. Yeah, very interesting presentation, right? So if we use poverty and some Bartic instrument, apparently trading with China is very good for us. But yeah, let me put the floor to test now. Please, the floor, if you have questions, I will gladly take them. Let me have a look in online. You have a question, Kak Lydia? Oh yeah, sure.
Well, I was thinking what proportion. What proportion is the import in the form of consumer goods and capital goods and intermediary and I guess raw material? Also, the data processing is at the district level,
Yes.
but you compile the, I guess, the summary in the provincial level. I guess that's because it's not easy to represent all the districts in one graph, but what does it say if we use the provincial level? Does it illustrate that what's happening across the districts? Might be that there's a lot of variations that doesn't show, for example. Yeah, thank you.
Okay, thank you. Thank you, Kalidia. Maybe I'll take another one. Rashas, please.
Okay, I have a few. Okay, so I guess 2 or 3 questions. One is because you only compare the districts after the 2008 until 2012. Do you also see any pre-trends? I guess that the main question is whether there was already a faster poverty reduction in those districts where eventually they got exposed more to trade with China, right? So you might want to check whether there was a pre-trend. Because one of the reasons I'm asking is, do you really expect, because your regression is same year regression, so do you really expect such contemporaneous effect on poverty from, let's say, if I import a lot from China this year, do I immediately expect the poverty rates to go down in the district that are exposed to those? So if why do you think that effect is so quick? I guess, well, that's one, if that's correct. Or maybe there's some explanation if there's pre-trends or some other issues that maybe you need to check. The second one is your normalizing variable when you calculate the exposure of the trade is labor. I'm just curious why you don't use GDP. I mean, I guess because the numerator is basically an import share, right? Or import value normalized by shared based on the share of the labor. So I guess the normalizing variable could be GDP, regional GDP. So it will be GDP per capita in the exposed sectors. something like that, right? So perhaps just curious why you use labor force. Partly because I'm wondering whether, because there'll be migration, right? If there is a big exposure in some district and there's more opportunity, then people might move to that location. So the labor force variable in the same year might be endogenous. So to just avoid that, maybe you want to use some other variable, or maybe even use the baseline variable or population or something like that. Third question is, I'm curious about the export channel. Why? I mean, I understand import because there's import competition, all right? And when the district is producing some good and we import that good from China, either it's positive in the sense that it is using the import as intermediate, or is some competition and that's negative. But export, usually people, I mean, if I remember correctly, the exporters are quite limited to Java. Most exporters are only in Java, right? So what does it mean for district in Sumatra or in Kalimantan to be exposed to exports if they're not actually producing any exports in the first place? And but maybe one way to think about this is we also have the annual manufacturing survey where you actually know where the exporters are located. So perhaps you could check whether export competition or exporting to China actually increases exports from certain districts using the manufacturing data, and use that as the more direct measure of whether some districts are exporting more to China because of the expansion in overall trade with China. And that might be a more direct way of testing whether increased exports from certain districts are actually reducing poverty faster in those districts. So yeah, just a couple of, thank you.
Thank you, Rashes. One more. Yeah, Bu Ingrid, please.
Okay. I have two comments. The first one is the use of 2008 as year. In this case, have you considered like possible confounding effect of global financial crisis? Because the time was coincidence with the global financial crisis, right? And also still related the selection of this year between 2000 and 2008. If we interpret the estimate coefficients between these two approaches, the coefficient are quite different. So in terms of elasticity, it could be very significant, right? And have you considered this really big gap? Thank you.
Okay, thanks.
Yeah, later maybe Warren can add some more. I try to answer the question. Thank you so much, Mbak Lydia, Rases, and Mbak Ingrid. For the proportion of import of consumer goods, raw material, and capital goods, yes, we actually have the data, but we did not put in here. Maybe it's good to have like a story about that to explain the result more. Yeah, I think that's a good suggestion. Thank you, Mbak Lydia. And also the provincial level variation. We actually do on district level, so we get more variation, Mbak Lydia. So I don't know. Yeah, maybe we can try as well. Yeah, Mas Waran. Thank you. Okay, district with the largest impact. Okay, so we have more story on that. Yeah. This district with this largest. Okay. Yeah. Okay. Thank you, Mbak Lydia. Yeah, we can take that suggestion and do some more exercise on the data and analysis. And some hard question from Rases. Yeah, pre-trend, we haven't checked it yet. Yeah, we haven't checked it if there is a trend of poverty reduction before 2008. I think there's a good idea to check is there any like pre-trend and maybe actually drive the result as well. Thank you, Rases, for this. And for the why we use labor, not GDP, to have this is my question. Actually, do we have a GDP that very detail into like that can we match with the sector. Oh, okay. 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 Yeah, ada ya. Yeah, yeah. Okay. Yeah, yeah. Regional jadi dapat. Yeah. Yeah. Maybe we can ask Mbak from BPS to help us in the dapur. Yeah, maybe in the dapur also have the data. Yeah, we can check if there is a data about that. And for the export channel, actually, why we don't use the manufacturing survey, because this is not only story about manufacturing, because many districts in Indonesia actually export like coal and CPO and other stuff like agriculture that actually include in our data. So maybe we can also test. Actually, we plan to test with the manufacturing survey, but yeah, we yeah. Yeah, what I think to do. But we haven't done it yet. Even we want to try like transaction level data, like if there is a firms that actually do export and import with China, so we can go detail on that. But we haven't conduct that analysis yet. Thank you. And for Mbak Ingrid, yes, global financial crisis. We actually have that comment before. But yeah, this is something I don't know how to argue that we are not that worried about that, because yes, there is global financial crisis, but in the macro term, actually Indonesia cannot is not impact much compared to other countries. But yeah, I don't know. Yeah, I don't know how to deal with this. Maybe Mbak Ingrid, you have suggestion to deal with global financial crisis, because actually this is and the gap between the uh-huh. Yes.
Okay, but in terms of economic interpretation, like 0.0 and something.
Oh,
concerned about that.
Yeah.
Would you
concerned.
about that?
Which one you should be using?
The significant
Yeah.
one. No.
The more significant. Yeah, yeah. Please help us to answer that. Actually, I don't know how to answer that thing.
Yeah.
Waran, please add.
No. Yeah, maybe we'll try to address some of the questions. I mean, additionally to what Deasy already mentioned, I think maybe start from the fresher one. Sorry, Parashes will come to your questions also, and Bu Lydia. But like, say for the use of 2008 as a base year, and we to consider the global financial crisis, I'm not sure how to handle precisely that, because essentially like all regions in the world potentially are also affected by it. So like that's sort of a unanimous unilateral effect on the world. But maybe if we can also, I'm thinking the most pragmatic way, we could say create a another shift share variable. But the shift share variable is like the impact, the exposure to GFC crisis, for instance. But to quantify that, maybe I think we can only track from trade side, but essentially try to take a look at, maybe how do we define the GFC periods, and how does the trade by product change within that period, and then we create the shift share variable for each of the regions, and then we do different regressions for those that are more affected, less affected. I don't know. That's what comes to my mind, but because that's the F stands for financial crisis, that's going to be another case that we'll need to discuss. So that's very valuable input. We'll try to to think more on that. Yeah, another case could also be maybe checking from like if that's financial crisis, then we check from the investment side at the sub-region level, like regions that have more influx of funds following the periods, and we track that from NSWI data, for instance. But yeah, that's some of the methods that come to top of my head. Very happy if Ingrid could also give some suggestions, but yeah. Okay.
Assumption behind the section is that the structure of the district employment is increasing before the shock, right? And whatever structure is closest to the shock there, it should be reduced.
Okay.
So you 2008 may be a little bit difficult, 2007 or 2006. Because what we are assuming is this is what will happen forever if nothing happens.
Yeah.
And the closer the share, the proportion is to the year of the shock that we are assuming is the shock happen, that's better. Because then what it's saying is the distributive is in some equilibrium, then the shock happened, and then now it changed because of that. And the exposure is based on the equilibrium. So
Okay.
maybe the best option is that this will just before the landing crisis.
That might work
But
very
first
much.
you have to check the share, whether there's big difference in 2007
Yep.
share,
Yeah.
2006 share. If no difference, then you don't have to
Yeah.
worry about it. But if there's some shift, then you may want to use the fee.
Thank you. Yeah. Actually, we did check for 2008 and 2000 again, because but like for 2006, like if I think that's a very
But then the
Yeah.
argument is that what you're assuming is the district is increasing. All in terms of development structure. And now we have the shock. Now the
Yeah.
districts that are more exposed to the development structure. So having closer date with the shock.
So actually, it should be 2006 and 2009.
Yeah. What he's saying is we have to do it before the deal. 2006 is the closest before
Yeah.
the deal.
can yeah.
But check the difference between the.
Yeah, exactly.
If there's no difference, then there's no big difference.
Yeah. Okay. Thank you. Yeah. Thank you, Parases, for that also. So yeah, we take the very great input from Bu Ingrid and Parases on that. Also, I think on the case as to why 2008 and 2000 and the 2000 coefficients are sometimes very different. I think again, as we have to say to almost all the questions that were provided to us, we have to check again. But what we think is the main driving factor is one of them is also because there has been quite some change between the labor force structure in 2000 and 2008. Even if we use the same nomenclature, the same KBLI for that, and as we shown in the regression in the appendix, it's quite different in the regions that have increased imports. That's one of our preliminary hypotheses as to why the results are different. But to explain why it's different by that much, we'll need to take a more closer look on that. So thank you.
The other thing that we can add is when we check other variables, control variables, actually we have quite consistent magnitude for the control variables. So for example, in here, that the one that significant is the education. So it is quite similar across all the specification. And also we also find in other regression. So yeah, it says something that actually actually the control is actually consistent for all the specification. Yeah, thank you.
Not the main regressors, fortunately. Yeah. Yeah, thank you. And also to add a few, I think for Paras's comments. So thank you also for the comments. I think in terms of the pretense, again, yeah, we haven't checked and we'll check. Also on the point that whether we expect the differences to appear so very quickly, like in an annual basis. Implicitly playing in this model, we say yes, but there also has been suggestion from from other panelists in our previous discussions that unfortunately we haven't here it start already, but we also can try like the long form regression, like the long difference. Yeah, so only like one set of regression, but like the difference between 2012 and 2008, I think the primary result for that is pretty similar, but we'll maybe add to the next iteration. Yeah, actually that's an interesting question. That was actually, if I can say anything, that was actually an arbitrary choice, because initially the design of the research was to also utilize like the firm level data that mentioned by Bu Deasy. Sorry. Okay. And that data only is only available up to 2012. But again, I think one of the reasons was because we'll have to check again. But I think the trade per work, the per worker part is only available up to that point, because after that the sectoral disaggregation for Sakernas changes, yeah, between. So we don't have the, yeah, which is related to the second question, I think, or why normalize with that again. Actually, many options to do that, but we do that more because the literature uses that, like the author one uses that, and I think some other literature simply uses labor. And I think also relates to the question that regional GDP that is concorded in a way where a lot of district proliferation and crosswalks happen is quite difficult. So, but again, we'll try to check if that's possible, but mainly because the literature has been doing that for the longest time. And yeah, I think we also have the plans to check on the IBS as the data, as for the third point from Parases, and hopefully we'll have something to say more on that. Yeah. And yeah, also lastly, maybe just for Bu Lydia and the data that we showed, the chart again, apologies, that's on province level, more because it's just easier to put 34, 31 on that. Yeah, we can definitely either regress at province level to see if similar results hold, or also to visualize better how we can show like the whole 500.
Lowest 5.
Yeah,
Oh,
probably.
okay.
And something like that.
Yeah, at the district level visualization, also in the descriptive statistics, I think.
Yeah,
But yeah.
maybe I want to add a bit for Paras's question on why 2008, 2008, 12. This is also because of we want to see the short-term impact of the ASEAN-China FTA. If we go to further like years, maybe there are so many things that happen. Yeah, and we cannot control for that. Yeah, that's the reason actually. Yeah, thank you.
Thanks a lot. Nice discussion. I think there's a person on the online world. Riyandi, are you there, my friend? You can unmute yourself, I suppose.
Hello, can you hear me?
Loud and clear, mate. Go ahead.
Okay, thank you. Congratulations, Mbak Deasy and Waran, for the very excellent paper. I have some comments. I have probably 3. I hope I hope you can answer all that, and I hope I have time to ask that. First is your OLS and IV result is. Can you hear me? No.
A little bit broken, but yeah, you just go ahead. I think you're okay now.
Okay, so your OLS and IV are very, very much different. Sometimes it can change sign, right? I don't know what happened with this. Perhaps you would want to explore more about the omitted variable bias that can drive this. What I noticed is that your out.
Mas Riyandi, we're losing you.
Oh, really?
Can you repeat?
Okay, sorry. Your OLS and
Yeah,
IV
now it should be
estimates
okay.
are very much different. Sometimes it's positive and sometimes it's negative. It changes sign. Probably the omitted variable bias is playing some tricks on your estimate. Definitely, that's why you use IV. But could you explore more on what type of omitted variable bias that plays out in your estimation? Because I noticed that the OLS result is, I mean, it looks like the omitted variable bias is driving up the estimate so that it is closer to 0 or even getting to positive. So maybe something happening outside the export shock to China that can drive up poverty rather than reduce poverty. That's the first. And second is regarding your estimating equation, because your estimating equation is already in the first difference format. So I don't think you need to maintain the time fixed effects and district fixed effect anymore. It's a first difference. Basically, it's very similar to the within average fixed effect. I think you can play around with that. Usually people that use first difference do not anymore maintain the time fixed effects and district fixed effect, but you can always play around and see how the result change. And the last comment is about your export shocks. Export shock of China actually begin in the biggest shock of export occur in early 2000s. In post 2009, we checked the figure. The value of export is quite moderated already. It's still high, but the change in growth, the growth is already moderated. It means you definitely need to expand your sample period, right? Not only 2008, 2012, but also before that, covering the periods where the China shock occurred the most, right? That's I think you have also idea on expanding the sample, but then you will face difficulty about the representative of the sample, right? You need to go down at the province level, and that will reduce so much your sample. But I don't think you need to shy away from that. I think to really say something on the export side, you need to cover early 2000s period because there where the shock mostly occur. I think it is okay to reduce the sample down to province level just to check the argument. And because when you use the base year in 2000, the result definitely disappear, right? So that's a bit concerning from that side. Okay, thank you. That's all.
Okay, thank you very much, Riyandi. Okay, so I suppose I can go ahead to Bu Deasy lagi, please, Bu.
Thank you, Mas Riyandi. I actually, when I think of the answer of your first question, I I cannot hear. I didn't hear your two other question, Mas Riyandi. So maybe maybe Waran can answer the second and the third question, and I will answer the first question. So what is the omitted variable bias? So we think that when there is like a two-way relationship between the regional poverty level and the trade, because the regional poverty level can also impact the population ability to engage in trade. So that's why we do the IV. So in the hope that we can reduce that two-way relationship between urbanization and the poverty, and mitigate the endogeneity issues. And also, you are right that our result for the OLS and the IV is quite different, but some of the result we also have the same direction. I think many of them actually have the same direction, but the significancy and also the magnitude are different. But maybe because of the two-way relationship between the poverty and the trade liberalization. Yeah, I can only answer that.
Right. Thank you. Thank you, Pariandi, also for the very constructive comments. I think it shows a lot of aspects that we also need to cover and check in the paper. We agree that, I mean, on the end of the day, I think almost all paper, virtually every paper suffers from the omitted variable bias. And I think we'll do our best to add more into that. So probably we're thinking about, looking at the potential other explaining variables that could happen at the regional level, because that's the only source of variations that could be. Hello. Yeah, so we'll try to take a look at more variables that could quantify the characteristics of the regions properly. if we can, reduce the potential of the bias, the aim of the next iteration of the study. As for the time, hello.
My
Yes.
suggestion would be to add preceding growth in poverty, preceding change in the poverty or employment change. Covering period before 2008. I think that could be good candidate.
Yeah, that is such a nice suggestion, Pak. Yeah, I think we'll try to implement that. And again, as you said, iterate the many models that we could iterate. Also on your suggestion on that, maybe we should drop like the time variables like the fixed effects, given that we already use the more normalized first difference variations. I think that's something that's very much worth checking onto as well. And I think on the export shocks that begun in early 2000s, I think if we are to also to do the checkings that were suggested earlier than by Paraskes as well, I think entailing to using the earlier base here as the labor force structure, I think it wouldn't hurt if we expand the estimation window to take a look at that, and or do the long difference, covering different leaps between years. So yeah, those are maybe the checks that will be done and further iterated. Thank you. Yeah.
All right, thank you very much. So yeah, we're at the end of the presentation. Probably I can say a little bit of stuff too. To both, congratulations for the papers. I think it's been a very wonderful discussion. I suppose what you guys can try have Java equals 1. It probably can tell you something as well. And in 2000 we already had a crisis too, right? So 2008 was quite interesting choice because two crises very close. And yeah, we had a lot of money coming in from the tapering on. So that's definitely going to impact our trade. So yeah, a bunch of things that needs to be controlled, but it's been great. I'm looking forward to read it on the journal. So everyone, please join me in congratulations. The two. And with that, I think we should end the seminar today. Unless, Bu Lydia, do you want to have something for future FKP? Oh, cool. So yeah, for the next FKP, please look at the chat. And thank you for BAPPENAS for hosting us today. I think more Indonesian ministry needs to do this kind of thing, right? Like hosting research, so our PNS can be a little bit smarter. But yeah, that's just my hope. So yeah, everyone, thank you very much for being here. I'm going to see you next week. Bye-bye. All right.